Okay, welcome everybody to this evening's AUDJPY Securities webinar. My name is Duncan Cooper. Tonight's webinar is live Forex market review. So let's get into that. Before we do, if you can all read through the disclaimer for those on our YouTube live stream. I can't see the chat, but I've given you a link to come into the webinar if you want to join us. For those in the webinar, you can talk to me by using the webinar chat box or the Q&A box. All right, let's move along. Now, if you don't know me, then my name is Duncan Cooper. I'm a senior market strategist and trade mentor here at AUDJPY Securities. And I'm a full-time Forex trader. I've been trading now for almost 20 years in the Forex market, mentoring for more than 10. If you want to contact me, my email is there on screen, duncan.cooper@acy.com. Through the week, you can connect with me at the website, acy.com, go to the market news tab, or at our YouTube channel, which is at AUDJPY Securities Australia. And if you want to connect with me personally, you can head over to my Linktree page and you get my links there. If you want to get access to the charts that I'm using in MT4, just contact Nathan.bray's emails on screen. And for those in the webinar, I'll put that in the chat. MD, good evening to you. All right, let's get into, first of all, the news items for the week, or the remainder of the week. I can just get rid of this page. Here we go. All right, so I'm at forexfacts.com, time showing my time, Queensland, New South Wales time. So tonight we have the US core retail sales month on month, and unemployment claims. Unemployment claims can definitely drive the market, as can the retail sales. So be aware of that item coming out at 10:30 p.m. this evening. Into tomorrow, 9:30 a.m., we have the RBA Governor Bartlett speaking. 12:30, RBNZ Governor Orr speaking from New Zealand. 4 p.m. for the pound UK retail sales, and that's the remainder of the news items for the week to note. So we obviously had the US CPI, PPI data coming out. Wasn't too much change to the data. Yes, we've seen US dollar getting weaker, but we may be seeing a bit of a turnaround. The other way, we'll have to wait and see. Right, let's get to the charts. So we'll have a look at the dollar index first of all. I'm just monitoring really price action of the dollar index here. This is a monthly low to high range. We've come down to that 79% level. Then we've come up to partially fill this imbalance here. And as you just saw, I'm monitoring to see if we're actually false breaking and rejecting down here. That's 79% level, the smaller one. Like if we have a day up today, we have like almost a hammer doji, long-legged doji. We have a day up today, that's going to maybe start to suggest that, let's get that in place, the market from a US dollar perspective could, after hitting this major 79% level, if we have a day up today, that's going to suggest that we are putting in a higher bottom here. And then are we going to be moving up? So bear that in mind. If you see the dollar index have a day up today, you should be anticipating that pairs to the US dollar should be moving down. All right, so let's get into as well now the S&P 500. This is a minor monthly range here. That's where we had a month down up to the high, all-time high, and we pulled back here on the day chart of that range into the 62.79% area. Had quite a nice corrective move back up there. Has put in a higher bottom here. So it's more up than down. It's a little bit mixed. It'd be nice to have higher top, higher bottom, which we don't have. But I think this area that we're broken above now at 53.89. If you're looking to trade the S&P 500 for maybe a longer term move up now, you want to be looking for a pullback to that area. Does that area offer support to move up, and can we start to take out these, tops 1 and 2 here for a move up to, I guess, re-challenge the high of the year, all-time high. Lots of speculation has been that this is the final top by some commentators, but monthly trend hasn't turned down. It's pushed down into a logical area of support. So I would be watching for continued upward move at the moment, I think, on the dollar index. Okay, euro dollar, which has been rather strong this week. All right, this is my day chart. And in fact, if I go to the weekly chart, I've just got all the weekly highs in here. There's 1, 2, 3, another one over here. So we're in a definite area of resistance. I know the weekly trend is up, and I know the day trend is up. But the big question is, for me, this top that we put in here at 110.08, week and a half or so ago, 2 weeks ago, is we did close above it yesterday, but we're already starting to drift back below, which, big half of that candle, at least yesterday, was a rejection at the 79% level of this December's high down to this year's low. So got a little bit of suspicious look about it, that maybe we're rejecting up there. And if we can't hold 110, we start to break below 110, I would anticipate we're going to be moving back down the range here. There's an imbalance. Go to the 4-hour chart. There's an imbalance here on the 4-hour chart that we have not filled yet. This week we've created an imbalance here. So I would start to anticipate that if we start to move, we're already on this 4-hour chart, we've already put in a little bit of a lower top area here, moving back below 110.08. Is if we can't, it's 50. If we start to, if we get a clear break below 110, I would anticipate we're starting to move down to fill those imbalances. So then you want to start to look to maybe construct something. Today, as it stands, we're not doing too much of a range. Very quiet. 12 pip range at the moment, give or take. So maybe it's just waiting for the US news to come out later in the day, but nothing is really. What did I notice? A couple of holidays here on the cards, French and Italy, but that's just 2 nations out of the whole Eurozone. So that can't be the reason why things are going exceptionally quiet. So I'll just be waiting to see what happens at 110. 110 holds, you could look to construct a trade up from 110. If it breaks, look to construct a trade down. Primarily, I'm looking for this to break. Then I'd like to see 110 to be resistance. But we may well see 110 holds. And if it does, then you want to look for 110 to be support. Can you see you're set up to buy? If you're prepared to buy it up here at such high levels. Don't forget what we saw on the dollar index. If that dollar index has a day up, this is obviously going to be moving down. Okay, euro yen. This is the level I discussed on Tuesday. So this is a weekly low. So we know the weekly trends turned down. This low here, 162.26.7. That's holding the market at the moment as resistance. We're having a week up after the 4 or 5 week decline. Maybe we can only have 1 week up. Maybe that is where we're stopping at. All right. So yesterday we tried to move above that level and we couldn't. Today we have traded above it, but we're back below it. And it's a little bit flat. So and we're also at last month's low, a fraction above last month's low, holding at that weekly resistance level. So structure there on the 4-hour chart is still up potentially. we've moved to a higher top there, and it's just holding at this resistance level. So until that euro dollar starts moving, this euro yen's probably not going to move too much either. So I think you really want to see the euro dollar show its hand for the day, and then what does the euro yen look like? But at the moment, irrespective of that, you can see yesterday once, twice, 3, 4 times, moved above, back below 5 times. 5 times it's trying to have a go above 162.26. So if you see another failure up here, then maybe it's time to look for a short. You know, I don't want to just go long into weekly resistance where it's been failing at 5 times. So if I want to get long, I would probably need to look at this range. It's a 4-hour chart trend range. And, you know, maybe look down at the 79% level, at the 161 level. What happens down there if we pull back today from a buyer's perspective? I'm not going to buy up at the top of this move. I'd need to see a dip. That would be a good area to watch if we got a dip. Okay. Now, there's a possibility that we're getting support here as well at 162. So, I mean, it could once more today simply come down to 162. There's only 26 pips up to weekly resistance, which isn't the most attractive trade. You know, if you're trying to get long down at 162, or you're waiting for a bounce off there, first of all, there's not that much room to get to 162.26, which is holding the market. So, but that is intraday support at the moment at 162. So the big question is, are we just having a week up? Are we going to see a week down next week? Or are we going to see further downtime? Need some more information at the moment, but definitely struggling as it's come back up to that weekly level that's broken below. Euro pound. Okay. Even today, it's almost got back up to that 79% level. Discussed that. That's the area colored on Tuesday. So I've been highlighting this on the weekly chart. Are we forming a head and shoulder pattern up here? All right. For a move back down, maybe to the 127 extension of the fib, or at least to test support from where we come up from. Down at 83, 82. So it has come back up yesterday and today, almost missed it by a pip maybe today, but yesterday came back up to 79% level. May still hit the 79% level today once more. That would be the selling level. Up to 86.02 if it got there, stop above here. So some of you may have already taken a trade there or not. On the 50-minute chart, it's just getting a little bit of support down here. So we just move to the 4-hour chart. You could look, if that high there is not going to get challenged, you could look at this range. Drop to the 15-minute chart and look at the 79% level up here. So that's at 85, 85 for a rally. Back up there, could hit the larger area. But that area there could be a selling level today if we can get back up to then further decline. So you could be looking to, just as an intraday trade, if this comes up, 79% level there, trade down to 127 extension. All right, pound dollar. This drop yesterday, this is my 50-minute chart, was the CPI data, which came in a little bit weaker. Later in the day, it came all the way back up to the same point. And this line here is from my weekly chart. This high over here, now that we're back below it, is acting as resistance. We could only be having a week up this week before fail. So there's a weekly level here. Sorry, let me correct myself. The weekly level that we're at is this one, 128.60. This one's a little bit higher up at 128.93. So you can see I discussed this area yesterday when we were talking about liquidity, these three tops here, which were all, these three candlestick highs here, all held at this weekly high. Once we moved below, they all held there. And where did we hold over the last 2 days? At the same level. Just traded a little bit above. Bit of liquidity sitting above there. Just getting traded into. So yesterday we had a reversal back down. Today we're just coming up within the range of yesterday. And if we go to the 4-hour chart, it's a little bit mixed here really, but this could just be a rally back up here at the moment to further move down from the area that we're seeing. So on the 15-minute chart, whole range is here. Go from that Tuesday's high down to yesterday's low. Been a fraction short of where we could get to yesterday after the decline. But what I was noticing earlier in the day is there was an imbalance in here. And if I actually drew the fib across this range, we fell down from there to there. Then if you're focusing on the 79% level in here, looking at the fact that we might come up to fill this imbalance that we formed yesterday, looks to me like the market's just coming up to fill up any imbalance that was created as we moved back down yesterday from that weekly resistance level and failed at the 79% level. And it looks to me like we could well be moving down today. Failure here. Price may come back up here later in the day when the news comes out. Could come back up to here or 128.60, but will it offer another rally to come down through to 127 extension today? Are we going to see a move back down towards the 28 level? All right. Yes, it can move higher depending on the news, but at the moment it's really struggling at 128.60. If you're much more on the buy side, then you want to see price move down. Get rid of this fib. This is where we stopped at on spike down. It's actually, that red line is last week's high. On this move down, we got a fractionally short. So really support, if support is remaining, is here for the buyers. Yes, this could sell down, but once we get down here, this is where the buyers could take control and then move it back up. And it could just stay in a range. So that is where you should be looking for a buy if you're much more bullish on the pound dollar. And up here, if you're much more on the sell side. 79% level up here. Can't read that number. It's around about 28.53 up to 28.60 resistance. Pound yen, much like the euro yen, except we haven't quite got there. There's a weekly area of broken support here. All right, we're having a week up after 4 or 5 weeks down. But is this just a small time rally before maybe more of a decline? Day trend is lower top, lower bottom. This is just all kind of correcting up and hasn't rallied half the way from that high to low yet. So not quite giving its hand to turn over. I've been a little bit range bound on most of these yen pairs over the last 2 or 3 days. As we get to the 4-hour chart, you can see quite flat. Doesn't seem to have any strong ability at the moment to correct all the way back up the range where it's been trading down from. So I think on the pound yen at the moment, I would wait for it's maybe forming a little. It looks like here that you've got a lower top just there and a further lower top here, but that's a higher bottom. So it is mixed, but it's maybe not able to quite come up as high on each rally. You can see all yesterday, there's a whole area where tops were coming in yesterday. And the bottom area of that is where we've been topping at and holding at today. So quite clearly, sellers are there. That's where they are right now, holding the market. So if you're wanting to get short, well, that's where the sellers are right now. So yeah, that's where you want to short. But it's very rangy at the moment. I think these yen pairs are waiting for the next little stimulus from whatever news item that might be, just to perk them up. Aussie yen. All right, so we're holding at, so including today, because we traded there today or within half a pip. So 1, 2, 3, 4 trading days at the moment. Going to the monthly chart, this high here, an old area of possible support as we're coming down. Now that we're back below it, is most definitely being resistance because the market keeps hitting it and wanting to come down. All right, it's not able to at the moment. Here's a weekly look. We're just having a week up, just. All right, we did have a negative day yesterday. See the wicks on top of these candles. Are we going to be able to hold at that 97.66 level? You can see it's very sideways and flat. It did move down to a lower bottom today. Is it putting in a lower top now? We had the job figures come out for the Aussie today. Now on the 15-minute chart, we had this move down through New York into Asia. Rallied up to 79% level, came up to that 97.66 level. See yesterday, once, twice, tried there, 3, 4 times yesterday. It failed up at 97.66. It's failed there today. So any movement back up to 97.66 has to be classed as an opportunity to sell, because let's squash this in. There's more. There's been 1, 2, 3, 4, 5, 6, 7, 8, 9 tests at that level. Yes, it's traded above, but it's not existing above there. All right, so that's telling you where the sellers are. They're quite happy up there to absorb any buying pressure. So that's the level to watch. Are you prepared to short down from 97.66 at the moment? Today, what we've definitely seen is a rally back up on the news from the Aussie job figures, back up to 79% level. There is an imbalance here that we have clearly not filled back to the downside yet. So I would anticipate filled some of it. So it's filled it to there at the moment. I would anticipate that we will probably fill this back. So any setup that you see is short, I would anticipate we could move back down towards 97 at least. And we could be getting ready for the next move down for the long term. Aussie dollar. This is my 15-minute chart. It's the same kind of deal. Yesterday's high here to the Asia low, and we came to the 79% level after job numbers. It's not doing much at the moment. It's just hanging around the 6619 kind of support resistance level from the day chart. So at the moment on the day chart, it's back to this area. It's getting support from what was resistance, has now moved back to support at 65.75 today, and it's been held at 66.19 resistance here. And we've kind of had about a 62% retracement approximately of that decline. You can see today's popped up to that level on the candle. So after that negative reversal yesterday, will that move up that we're just having at the moment from the news, this 79% level, is this, that's the drop down decline from 62, just above the 62 area. Now we're holding here at the 62 and the 79% level. 62 are the large range, 79% on that small range here. Are we going to see a breakdown from this area to the downside? I will certainly watch over the next 24 hours. It's still above and below 66.19 at the moment. Market can't quite make its decision what it wants to do, but if we see a clear breakdown, expect 66.19 to be resistance. And that might be the trigger for the next start of the next decline. We've had on the daily a very obvious strong decline down, hit support. But that is a lower bottom to that bottom just, and this in all reality could just be corrected to the 62 level to move back down towards 63, 62. But of course, got US news coming out later, so I mean we could still break high. We could get up to the 79% level here. So we really need to see the market just decide that okay, it doesn't want to be above 66.19 anymore, and then if we can, we did trade below 66 today, but pop back above it. So are we going to start to see over the next few trading days price action that wants to be more below 66? That's going to start to give you maybe that sign that we are maybe starting the next decline. Okay, New Zealand pairs, we had an interest rate cut, unexpected, and in fact, the can't remember his name, Governor Orr, actually said that they were thinking about maybe cutting by 50 base points. So that's definitely put a very strong understanding that maybe further interest rates are now coming from the New Zealand. They're back to normal inflationary bands and going to be moving back down to much more normal interest rates, potentially. So we did have a good drop on the New Zealand yen. We may well come up and feel some of this imbalance. It's always difficult after a big drop. But on the day chart, what we're seeing is a big reversal day yesterday. And 88.16 is a monthly area here that we're just above. And 89.94 is a weekly area here that we got a little bit short of. So we're a bit trapped between support and resistance here. And on the day chart of this range, we've almost come up to the 79% level here. And you can see today and yesterday, we are getting support still from the monthly area at 88.16. But after the interest rate cuts, even though we get support here, I don't think I want to buy. I'd much rather see if price can come up with inside the candle yesterday for sure. So yesterday, let's just go to the 4-hour chart. 4-hour chart. Once it's hit support, like all the other yen pairs at the moment, aren't going too far, very quick. We are kind of just holding underneath last month's low here. Last month's low at 88.46. So the candle of the month for last month, we're just holding underneath or at the low. 15-minute. Tricky at the moment. Doesn't want to go through support at the moment. It's waiting for some impetus to maybe be able to do that. And trying to construct a short here. I mean, it could keep holding at last month's low, but I just keep looking at this imbalance and think, oh, we may well come back up the range to fill that imbalance. So if I'm trying to work out myself, high probability, 62 level here and the 8900 level and last week's high. To me, that would be a much better area to look at for a short, but of course, price isn't at that level at the moment. And there's also this imbalance to fill potentially. So you can see the top of that imbalance comes in just slightly ahead of, just slightly above, I should say, the area there. So we can actually see, in a perfect world, coming into this zone, first of all, does it fail in that zone and then turn over? Now, at the moment, we all can see today, it does not want to really get too much above last month's low. And this whole range here, let's just get rid of this fib over that. Let's get rid of that fib totally. There's a range, we're just in this range at the moment. And we might not want to move above these highs here either. So we're getting into a tight range, which is not very appealing, but we may only just stay in that range, which I wouldn't normally trade in a tight range like that. I'd much more prefer to look at this range. All right, so will the market offer a higher rally? You'll have to just watch and see if it does. Of course, if we get a clear break below 88.16, then over the next few trading days, you may well be looking at 88.16 to be resistance on any kind of form of rally. New Zealand dollar, today it's been trying to get below 60. Again, it's a little bit difficult at the moment after that big drop of yesterday, but on the day charts, we came up to this area of old support, almost got to the 79% level of this lower top on the, that's a lower top on the weekly chart here. Even though it's a day chart, that is a weekly lower top to a lower bottom. So that's why I've got my fib drawn across that weekly range. We've rallied to 79, fraction short. So we may see some movement back up within yesterday's drop at the moment. Although we have put in a lower top here, so we may only move, we could move back up depending on any news volatility. We could move up, back up within this range. So look at the 79% level that overlaps with broken support beam resistance at 64 up here. But you can see we've already put in a lower top, so we may only trade in the vicinity of this range before wanting to move down. So I would look for some opportunity to get short with an expectation with these further interest rate cuts potentially that we can be moving back down to at least test 58.58. All right, so that range there at the moment. I'd primarily look at if we do come up, central pivot here and 79%, that kind of zone there. So that is 60.25 to 60.19, 60.19 up to 60.25. It's only 20 pips away. Looks a long way away, but it's only 20 pips. And I wouldn't want to, you can quite clearly see that we've tried to move below 60 at the moment and we're trying to pop back above. So I wouldn't want to short too close to 60 because it could be support for a move back up to, go high to the high end of this range and fill this imbalance up here. Although it came up yesterday just to fill this imbalance. And there's a fraction left at the moment. So you just have to monitor, see if you can see it. You're set up to sell at a level that you like. Up here is getting very close back to the top of this range where we failed yesterday. This candle here was yesterday's news candle from the US. So trying to get above there, the market didn't like it. So that could well be a sticky area. All right, dollar Canadian. Tried to get below 137 yesterday, but then couldn't. To my day chart at the moment. So here's the major range. Weekly trend moved up, heavily rejected last week, but we are in an uptrend. Weekly chart won't be in the downtrend until we break support. So all we can really do is assume that, yes, this is corrective at the moment, and will it find support to maybe have another impulsive move up? And this day is down at the moment, but we had a reversal candle yesterday. It's actually coming in on top of this little swing high here. So to the 4 hour, what we're finding is not spending too much time below 137 at the moment. We could see, whilst we don't have a uptrend on the 4 hour chart, I did notice that we could maybe, let me just, this could be, of course we've kind of moved below here, but I'm just looking at, we could form a little inverse head and shoulders here in the 62 to 70% zone of the range to maybe start to move back up this way. Now, this little range here, we go to the 15-minute chart. So on the 15-minute chart, you can quite clearly see that held, couldn't quite get there. Then we dropped to come straight back up. So we've already hit the 62 level, but when the news comes out later in the day, I think the area to watch would be, yes, that 62 level at 137.02, down at 137. Well, all the way down to 136.96, because that's only a 6 pip area. We have actually traded there already today. So will we come back in? That's the area, that's the buyer's area at the moment, I think. And getting into that area would see any imbalance here potentially that we formed yesterday be filled. All right, but it might, that current 50-minute candle maybe is telling us it doesn't quite want to get back down there, but that would be the area to watch later when the US news comes out. Do we get a bit of volatility just to drive it into where maybe the buyers are quite clearly sitting, and then are we going to move up? We have actually had a day up today after yesterday's daily chart reversal, so there's a bit of a bullish nature about that at the moment to maybe move up. Dollar franc looks to be putting in a high bottom here. So it has come up to where we'd expect price to rally back to, but it looks in like it's getting some support here. It's having a day up after this rejection here. So 4 hour just turned up. And that's, I don't want to draw a little fib in here. I'll just keep dragging the fib up and see if we, get some form of decline to the 62.79% level as a dip for an opportunity to buy. Now, it's miles away from there at the moment, and if the news comes out from the US dollar positive, then it probably won't get down to that level, but that's where I would look on that pair at the moment. 86.36 down to 27. Dollar yen. Now I've got a day chart. Hasn't had too much of a move up. Some of the other yen pairs have moved up a little bit better than the dollar yen. Maybe it's putting in a higher bottom here, but we're getting a lot of candles together here. And not really wanting to move below 146.47 this week. You can see all the candles trading below Number of them trading below, but then coming back above. You know, it's getting a little sideways in here at the moment. So I don't know which way it's going to break. So I would tend to leave it alone. I did say on Tuesday, you know, from the buy side perspective, watch price come back down to 146.47. But we're not at the buy side at the moment. That is the buy side. And, you know, the sell side is probably this high. So move to the 4-hour chart. It's last week's high here. Price has been held at last week's high, 147.89 as resistance, and supports 146.47. And so that's not a great range at the moment. It's only, what is it, 41 pips approximately. It goes on a little bit above and beyond the outskirts. It's about a 50 pip range at the moment, so it's not that attractive. And really, I think this pair at the moment, you want to see that 4-hour chart start to trend. It's not trending at the moment. And that doesn't really matter which way it breaks. It can break to the upside and start to show a nice trend. You know, that was a nice trend coming down here. This is just sideways. It hasn't yet worked out which way it's going to break. The only factor I am seeing is that we've come back above the weekly level of support that we broke, and it is offering support. So that could be a slightly more bullish sign, but I would just like to see price action break into some form of true trend that you can go, okay, we're getting a little bit more of a direction, and then we can look to trade in that direction, whichever way it breaks. All right, let's finish on gold. Now, I drew this in last night in terms of where liquidity is. Buy side liquidity, sell side liquidity areas. We're a bit range bound on gold. This is the all-time high at the moment, and you can see then we have a top here and another top here, which are slightly lower than the all-time high. So it's not got the strength to even trade at that high. Never mind trade above it and then false break it. Doesn't mean to say that we can't get above, but sometimes, you know, when you're looking for something to trade, you just have to decide, do we like the look of it or do we not like the look of it? Do we want to go and trade something else at the moment? It is holding above this high at the moment. Just want to put a line up here. All right, 4-hour chart's going to tell you what you want to know. Big drop in imbalance. So it came up. So last night's lesson on liquidity, if you're with me. Here's your buy side liquidity, retail buyers. What did the market do yesterday? Traded above these highs and took the stops out, only to then drop very quickly from there, showing an imbalance. So I would be looking for a rally back up here to the 79% level. 24.71 for a move down at the moment. Could even look, be patient to see if price will retest that area where we false broke. Does it come back up into I can get that box to highlight. So come back into that area as well and reject. All right, so the all-time high, which is here, couldn't reach it there. And then we're struggling here now at this secondary high, that lower top. So that is telling you that that is very, very, very expensive up there. Yes, news can most definitely get price to be driven above there and take a whole bunch of stops out, but it doesn't look like the market from a price point is wanting to commit above there and say, hey, we want to be above here because gold should be way, way more expensive. That looks to be that's excessively expensive at the moment for gold up there. We're not wanting to move to new ground at the moment. quite happy to trade up and close to the highest price, but then backing off. And, from a supports perspective, we can stay range bound on gold. Here's support down here. This is the support area. If we fail up here, move down here, it doesn't mean to say we're going to have a massive collapse on gold. This is where support is. You can see all the support over here too. In this zone. All right. Which is why we got support here. This whole support zone is from that high there. So all right. So I mean, up here, the resistance zone is really. Let me just go back to my daily. That line's not 83.64. That's your resistance zone. And down at the bottom is your support zone. So look for shorts at the top and look for your buys down at the bottom in that range that it's forming at the moment. All right, that's my thoughts on gold. So just be aware of the US news coming out later in the day, where you have unemployment claims. Now, this figure can often be very volatile for the market when it comes out, if it prints very much different to what's expected. And of course, we've got retail sales, so could see some volatility later in the day from that news item. All right. Now, webinars for me next week. I will be back on webinars from Tuesday doing more analysis. So if you want to join me, there's the webinar link at the top. Next week, Analysis Tuesday, I'm going to go through order blocks, part 2 of smart money concepts, and more analysis on 22nd. The week after that, I won't be here. I'm having a little operation on my shoulder. So I'm going to be having a week off, unless my operation gets cancelled, then I will be back the week after. So at the moment, there's nothing scheduled for that week, but I'll be back the week after that. Yep, if you want to watch tonight's webinar on YouTube, if you head over to our YouTube channel, go to the live tab. That's us right now. So just head over, I'll put it in the chat. Thanks for the good luck, MD. Here we go. I've got a frozen, because I'm assuming, MD, you're a doctor. I've got a frozen shoulder, which doesn't want to release. So that's what I'm getting fixed. All right. So there's a link for YouTube if you want to watch any of the recordings of the live analysis. They're all on that link there. Okay. All right. Thanks, everybody. Look forward to seeing you next week. Enjoy the rest of the week. Thanks.